Adjustments needed for inventory. Adjustments needed for inventory, net realizable value. Cost of inventory equals plus YY. NRV equals minus X. Consequences of holding too much inventory. Theft, 1. Storage costs, 1. Insurance, 1. Obsolescence, 1. Damage, 1. Opportunity cost, 1. One sole traders. Introduction. Sole trader, the owner of a business who runs a business on their own. Prepare an ISs and SOFP from full/incomplete records. 2 partnerships. Prepare an ISs and SOFP from full/incomplete records. Partnership ACC. Appropriation ACC and ACC prepared after the IS. It is used to show how the profits of the year is divided between each partner. The following have to be considered. Partners' salaries. Interest on partners' drawings. Interest on partners' capital. Share of the residual profit. Interest on capital, a share of the profit for the year, usually, based on a percentage of the amount of fixed capital each partner has contributed to the partnership. Interest on drawings, a charge made on the annual drawings made by each partner, usually calculated as a percentage of the drawings made. Capital ACC, an ACC to record the sum of money which a partner introduces into a partnership. It is only adjusted for any further capital introduced, any capital W/drawn, any share of goodwill/any profit on the revaluation of partnership assets. Current ACC, an ACC which records a partner's share of profits and any drawings made by them. Why may a partner have an overdrawn account? They may have drawn more than profit earned. Partnership may have sustained losses.